Hi all, it's October 2021. I'm going to touch on the worries over tiger brokers. Ignorance is not bliss. Here we go with the various scenario analysis before people start to panic over what happened. Appreciate a like if you like this video and do subscribe to my YouTube channel. Last year's only see worst case scenario. Like what I say, ignorance is not bliss. Why not let me go through some more scenarios here? Scenario 1 being the worst case scenario that China bans its citizens from investing overseas. And for Tiger app to be taken off China app stores and Tiger to pay a penalty of 1% market cap. And to return customer deposit from China. But the good thing here is Tiger brokers can continue to build on Southeast Asia business. With Singapore already at 200k funded accounts, it's not so worrying for me. And taking into account their markets like Malaysia, Philippines, Australia, New Zealand, there should be at least another 45,000 funded accounts, if that's my assumption. Scenario 2, China to initiate a pilot test on overseas investment by citizens. Initially, only 1 million citizens out of 1.4 billion population, not a big number, but it's 0.07%, good enough for them to test pilot this initiative. And for Tiger brokers and Futu to split the quota, meaning 1 million divided by 2, each of them will have 500k. Why Futu and Tiger have the privilege? Well, they already have the head start and they have the US licenses. And the quota is definitely more than enough for Tiger brokers with its funded accounts from China estimated at 284k. And there's no need to return funds from China clients and no need to pay penalty. That's my scenario 2. Scenario 3, the best case scenario, China allows overseas investment with no limit. As in, it's not a pilot test. People can just go and apply and change renminbi into various currencies up to a certain dollar amount. And this led to a surge in clients from China. At the same time, they received the internet brokerage license, so they solved the part that there is no longer regulations. And with the receipt of internet brokerage license to do overseas investment by Chinese clients, Tiger and Futu are officially in the open. It's no longer a gray area. But of course, with all these activities, there's OPEX costs going up. And I made an assumption of 20% being increased in the short run to match the unprecedented client application. With the uncertainty concerning regulations clear, Tiger received Hong Kong trading license. And I also assume in the blue sky scenario for Tiger to do an IPO in Hong Kong. So this will mitigate any other concerns concerning to it only being purely listed in US. Here I repeat the scenarios 1, 2, and 3. I include the numbers here in terms of my assumptions so that you will know what I did in order to derive at the price target in the subsequent slides. So market cap right now is on 1.2 billion USD, cash holding around 0.2 billion USD, with a penalty being paid of 12 million USD. And customer deposit right now is 23.9 billion as of 30 June 2021. Because like what I mentioned earlier, Southeast Asia business plus Australia and New Zealand will have around 245k funded accounts by 2Q. And I assume that because China does not allow investors to actually invest anymore, so they don't open any accounts from China. So 245k, you add another 70k in 3Q and 4Q each. This will add up to 388.5k by the end of 4Q. I made the assumption that average deposit to be ranging from 20k to 40k USD. So the low base using the numbers is around 7.8 billion for Southeast Asia customer deposit and high base of 15.5 billion USD. For scenario 2, the status quo, but because they can keep the 529,000 funded accounts, they don't have to actually return money to the Chinese clients. The paying customers, just to be conservative, I assume they acquire another 70k funded accounts in 3Q, another 70k funded accounts in 4Q, which work out to 4Q of 669k of funded accounts with an average deposit of 43K. Not too far from current numbers. In fact, I use a slightly lower average deposit numbers by per user, per funded user. So customer deposit by 4Q will be around 225.8 billion. So for best case scenario, 3Q, I also assume another 70K of funded accounts being acquired because of the uncertainty. So Tiger is not that aggressive to acquire any accounts from China. But because of the positive reaction from the market, they can acquire another 200K funded accounts in 4Q. And that led to a number of 799K of funded accounts with an average deposit of 40K by year end. So China and Southeast Asia customer deposit will work out to 40K per funded account multiplied by 799, which work out to 32 billion USD. So who are Tiger Brokers comparables, meaning the competitors, companies in a similar line of business? Robinhood, IFAST, ISMoney. So what's their market cap? Here are the snapshot from Tiger Brokers platform with market cap of Tiger Brokers at around 1.2 billion right now. Robinhood is at 34.85 billion. IFAST is at 2 billion USD, and ISMoney is at around 53.76 billion USD. That we know Robinhood, IFAST, and ISMoney market cap. Do we know what the customer deposit and the valuation paid per deposit? I have extracted Robinhood, IFAST, Tiger Brokers, and Futu customers asset figure as well as the customer deposit number. Slight differing factor here is the deposit number from Tiger Brokers. Reason being because they only disclose this figure, and typically customer asset, if you include in leverage, is a bigger number. So I will make some adjustment and assumption with regards to Tiger Brokers asset figure. You'll see that for the valuation per customer deposit, Tiger Brokers actually is being valued at 0.053 USD, whereas Futu is 0.181 and IFAST is 0.186, and for Robinhood to be at 0.41, the highest. And valuation per customer deposit, I actually did the range of low to high, and you see the numbers, an average figure of 0.259 excluding Tiger in the computation, and having a median figure of 0.185. Remember all these numbers because these are the numbers that I will attach in order to arrive at the price target for different scenarios. Just based on this metric, Tiger Brokers and Futu seem underpriced by the markets. Market participants are very worried over the personal information protection law and whether overseas investment by Chinese citizens will be allowed. Now that we have different numbers and assumptions being mentioned earlier, what's the price target for different scenarios? Don't just focus on worst case scenario. Scenario 1, the worst case scenario, I will still show you. With the various assumptions like customer deposit of 7.8 billion, with an implied valuation using the valuation per customer deposit 0.053, this worked out to around 0.61 billion of market cap if we take into account the cash of 0.2 billion. And high base customer deposit using the higher customer deposit base, they will work out to around 1 billion of implied market cap. This turns out with a low base share price scenario of 4.06 per share and high base of $6.78 per share. And that's if you use a very low figure in terms of valuation per customer deposit. But what if we use other comparables valuation like the median metric value, which is 0.186? The low base customer deposit will work out to around 10.89 USD per share, and the high base customer deposit using 15.5 billion USD of customer deposit, you multiply by 0.186 plus the 0.2 billion cash holding, that work out to around 3 billion implied market cap, and you divide by the outstanding shares, which work out to around 20.3 USD per share. And that's because we changed the metric value included. One is 0.053 and one is 0.186. So you look at scenario 2 here. customer deposit of 25.8 billion, like what I mentioned. So the implied price target using this approach and the formula that I mentioned work out to 10.38 USD per share. And if we change the metric value from 0.053 to the median metric value of 0.186, the implied value is actually 32.97 per Tiger Broker share. And if we use Futu valuation per customer deposit of 0.181, this work out to 32.12 per share. You realize the median pricing is actually the IFAST pricing. So for the best case scenario, China allows overseas investment and there's a surge in China clients. I come up with an implied price target of 40.58 USD using the metric of 0.186 like the above. And if I use the average metric, because there's so much excitement right now and the regulatory uncertainty, and with Tiger Brokers being awarded the internet brokerage license, which is not unlikely because there's such licensing in the local market. East Money have the online brokerage license. It's just whether they want to extend this to the overseas investment by Chinese citizen. And this work out to around a price target of 56 USD per share. But what about other valuation approaches besides just using this customer deposit valuation? What do professionals do in the valuation? Do they need a business degree or pass through the CFA program? I'm glad that I have both. Typically, the valuation approaches include relative valuation approaches that take into account price earning ratio, price to sales, EV/EBITDA, price to book value, price to RNV, etc. And it also depends on which particular sector the company is in. There's also a commonly known approach that is discounted cash flow, which you project future free cash flow and discounted back by a discount rate to arrive at the current present value of the company. And do subscribe to my YouTube channel if you'd like to learn. I will, over the course of this period, mention the various valuation approaches and how to do the numbers as well. Ultimately, will investing of overseas shares by Chinese citizens be allowed? That we don't know for sure. Various price targets have been prepared for different scenarios because each of us have different way of looking at things. But we have to know one thing: they are based on assumptions. I always like to say this: garbage in, garbage out for financial model or valuation approaches. You use the wrong assumptions, ridiculous assumptions, the valuation will get very wrong. So what's your view? Do you think China will allow its citizens to invest in overseas shares? I do not want to complicate the matters here to include discounted cash flow, the DCF. What's my view? You really want to hear my view? I am optimistic with China and think best case scenario is possible. And even blue sky scenario in the long run. Remember what I shown earlier, the price target is actually using 4Q2021 customer deposit figure. But if we think further, when you have a 5-year time frame, what will be the customer deposit 5 years later? It could be a blue sky scenario with 40, 50, 60, or even 100 billion customer deposit. And that will be a different pricing. With Tiger Brokers and Futu having the first mover advantage, Tiger, I believe, will definitely be able to benefit from this wave when China allows the investing of overseas shares by citizens. But you know, I always like to say this, I could be wrong. So do manage one risk in looking at investment. Just don't only purely focus on potential return and ignore the downside risk. As always, this should not be construed as any investment or trading advice. Do stay tuned and subscribe to my YouTube channel so that I can be kept updated promptly when I release new videos to reflect the changing market conditions.